Let's talk to Robert Sijpesteijn. He is a sales trader for Ayondo. Morning to you, young Roberts.
Morning, mate.
Right, we've got 7 thought-provoking slides to go through. Without further ado, kick us off.
Perfect. No, I mean, what we're coming in to talk about today really is the current market volatility and the downturn that we've seen since January. I mean, across the board, we've sort of seen a downturn of almost 9% across all indices. You know, if you're looking at the DAX, if you're looking at the FTSE, you're looking at the US S&P 500, all the US indices are almost down 9% since the end of January, about the 28th, 24th of January. So it's causing a little bit of concern, and people are talking about potential bearish markets. You know, we've had 2 consecutive months of downturn in a lot of these indices. We are seeing a little bit of an uptick this month in a few. So hopefully we're not going to get into that bearish market. Hopefully it was just a little scare, people taking profits. But it's a fair drop there across the indices. So what we want to try and do is raise awareness on this and make sure that our clients are aware of what's happening and able to prepare themselves ideally for this downturn in case it continues. That way they can add traders that are going to be able to protect their accounts. So, you know, obviously we have a few other things coming into effect. We've got the US-China war trade that's currently going on. And obviously that's causing somewhat of a concern because we've got the agricultural sector taking a real hit in the US and then China as well. If they start implementing further tariffs onto, you know, whether that be construction or automobiles, you know, all of this is going to add in and cause more concern in the sort of equity market and certainly in the indices. So we need to start looking at a few other options. And the final concern is sort of Syria.
Yeah, understood. Okay, well, let's talk diversification then.
Yeah, so obviously with Ayondo markets, you can choose up to 5 top traders. So, you know, with an opportunity like this, then maybe it may be best to use all of those 5 top traders so that you're really, you know, in a lot of different pies and you're protecting yourself. So we want our clients to manage the exposure and maybe start diversifying into some safe havens. So, you know, you're talking about your gold, some currencies, if you're looking at yen or other, you know, types of safe havens that are classic go-tos in times of concern, especially if this continues, then at least you're in early. You know, we've seen gold come up over the last few months. It's been ranging really between sort of $50 to $100 range there. But at the same time, if you're in it now, if it downturns a little bit, it's not going to be a huge downturn on those safe havens, but the rest of the markets you are going to have quite a large downturn on. So that's the one thing that we want our clients to start looking into. And then the other thing we want to remind them of is that you can obviously execute trades on your own portfolio. So if you manage your own funds quite a lot, or you have trades running from a particular trader, then do bear in mind that you can close that trade out yourself, or you can even you know, add a new trade on.
So basically manage your position, right?
Yeah, exactly. You know, you don't want to have too much exposure from some of these traders. If they're, you know, trading very heavy on the DAX and you're concerned that there is going to be a downturn again, then you can close out some of those positions, you know. You could close them out. Obviously, sometimes you might need to close them out in a loss, but it's better to take a small hit rather than, you know, hold out.
Or certainly know all about that. Okay, so let's move on to Just Gold. What is this slide telling the crowd?
So this is the view that you get of our traders when you come on the platform and take a look. And this is one of the traders that we want to look at today because of the diversification side of things and one of the safe havens. As his name suggests, he is purely trading gold. So he hasn't been with us for all that long of a time. You know, started trading really in October last year, so coming up on about 7 months. But the performance has been fairly strong. I think he's up about 7.9% overall, and he's got, you know, a drawdown of 9.75%, which would have been sort of around the middle of February there, that he's had that downturn. So that's not a bad performance, you know. Although he hasn't been with us for a year, he doesn't have all the 5 flags. You know, he's not an institutional rated trader with us. He's still quite a fresh trader. This is one trader who takes a long-term view on gold. He's only trading long. And, you know, his average hold isn't particularly long. It might be somewhere between 3 days to 2 weeks. So again, it's not necessarily a day trader. A lot of people will come to us looking for day traders, but this is someone who's going to be holding those positions for a little bit longer. But at least you're going to be diversified into one of these safe havens in case anything were to sort of go wrong in the market.
Understood. So if we just go on to the next slide here, that's his transaction history, is it? So you can go back and just see what slippage there is, etc., etc.
Exactly. Well, hopefully no slippage, but obviously there is a timing delay, but it's, I mean, milliseconds between the top trader and the follower.
Right.
But on this side, what you really see is where they're taking their profits or where they're making their losses, sort of what stake size they're trading. He's fairly consistent with his stake size there. It really doesn't vary much. The risk that he's taking, the third column in from the right-hand side, you can see the percentage risk. So if you're following this trader one-to-one, which is the standard setting, in each of those trades, you would be holding the same amount of risk on your portfolio. So if he's risking 5.6%, you're risking 5.6% of the cash in your account there. Now, that being said, he does have fairly wide stops as well. He or she has wide stops. And, they're not winning every trade, but they are doing, consistently fairly well. And those winning trades tend to be fairly larger than the loss-making ones.
Understood. Okay, let's move on to Prudent. What is Prudent trading?
Prudent trading, exactly, yeah. Being very picky and hopefully being quite successful. Prudent's also fairly new, coming up on a year with us. But this trader is someone who does trade a wide basket of goods. We've had a look at some traders here who've only specialised in one product, like Just Gold there, and we have a lot of traders who specialise in DAX with us. This trader is one who trades multiple assets, so he's going to be trading a lot of currencies. He does trade some DAX. He trades the US Volatility Index, which is quite an interesting thing to trade as well. There's quite a lot of movement on that over the last few months. And the other thing is he does trade a few equities as well on a longer term basis, and those will be both US and European equities. So on that basis, he's quite an interesting trader because you will be diversified into quite a lot of things. But again, where we were talking before about sort of the diversification and the managing the account yourself, what you could do is you could go onto this trader's account, and let's say you just wanted to follow his USD JPY trades. You could then choose to just follow those trades from that trader. So
you can basically strip out what you don't want to trade, effectively.
Exactly, yeah. So you can take a look at it if he's trading.
Okay, well, if we go on to the next slide, we've actually got the asset allocation there, haven't we? So I can default and go, I don't want to trade the NASDAQ or...
Exactly, yeah. So you can take a look here, and then what you can even do is where we were looking at the transaction history before, you can filter it out so that you can see just his trades on, the Euro USD, see how successful he is. If he's got, above an 80% hit rate that he's winning, why not, add that in? If he's trading something that's, just not doing so well on, then it's maybe not a bad idea to exclude that from that trader list.
Okay, that sounds pretty sensible to me. In terms of the final slide here, that's his history, and again, you can basically just look at what he's good at, and dare I say, more importantly, what he's not very good at.
Exactly, yeah, and you can see here that this trader, whereas the previous trader was just gold, he was just trading long on gold market. This trader here, Prudent, he is going long and short within different markets, and he is trading, a huge array of assets. Also, what's nice to see is you can see some of the profits that he's taken there, one of the profits that he's taken there is actually through a stop loss. So whilst the trade's running, he is doing some management on that trade, and he is, setting that stop loss above his entry price just to make sure that he can take a profit if the market turns around.
And in terms of the transaction history, this is showing all open positions as well.
Yeah, so you can see all open positions as well. Yeah, right. Exactly.
Okay. So final thoughts.
Final thoughts is really just prepare. That's the best thing that you can do. The worst case is to not, prepare to fail to prepare, sort of thing, or the other way around, fail to prepare to fail. If you're not in sort of these markets early and there is a further downturn, then you may be regretting that decision. We're not saying you need to get into them, but it's something definitely to start thinking about.
Robert, on that note, thank you very much indeed.
Thank you.